Cryptocurrency, the buzzword that has taken the financial world by storm, offers a promising avenue for investment. If you're a beginner eager to delve into the exciting realm of the crypto market, understanding how to analyze it is crucial. In this guide, we'll break down the basics of crypto market analysis in a way that even newcomers can grasp. Start with the basics, research the fundamentals. Before you dive into the nitty-gritty of technical analysis, getting a handle on the fundamentals is key. Take a moment to explore the cryptocurrency you're eyeing, delve into its tech, purpose, the brains behind its development, and the strength of its community support. Websites such as CoinMarketCap, CoinGecko, or the project's official site are awesome starting points. Unraveling the fundamentals of cryptocurrency feels a bit like uncovering the secrets of a digital financial revolution. Picture this: cryptocurrency is like a decentralized digital currency, using fancy cryptography for super secure transactions. The real magic? It unfolds on a thing called blockchain, a public ledger noting down every transaction across a network of computers. It's like a crystal clear, tamper-resistant digital bookkeeping system. Bitcoin, the original crypto trailblazer, made its debut in 2009, but today, there's a wild variety of cryptocurrencies catering to different needs. To get the basics, wrap your head around concepts like wallets, private keys, and mining. It's akin to stepping into a crypto wonderland, where traditional financial rules get a remix, and everyone's got a front row seat to the future of money. Understand market capitalization. Market capitalization, often referred to as market cap, serves as a crucial metric that signifies the overall value of a cryptocurrency. Its calculation involves multiplying the current price of the cryptocurrency by its total circulating supply. A high market cap generally indicates a more established and stable cryptocurrency, while a low market cap may suggest higher volatility. To put it in simpler terms, envision yourself at an enormous buffet where each dish symbolizes a different cryptocurrency. The total value of all those dishes combined is akin to the market capitalization of the buffet. It represents the sum total of money that people are willing to pay for all the different dishes. So, if Bitcoin is like the coveted prime rib at the buffet, and there's a massive demand for it, the overall market cap of the buffet, or the crypto market, goes up. Conversely, if people start losing interest in the prime rib and shift their attention to, let's say, the dessert, another cryptocurrency, the market cap might undergo a change. In essence, market cap provides a snapshot of the broader picture, revealing how valuable the entire crypto buffet is at any given moment. Explore price trends, technical analysis simplified. Technical analysis dives into price charts to forecast future price movements. Beginners can start by focusing on straightforward indicators like support and resistance levels. Support is where the price tends to halt its decline, while resistance is where it halts its ascent. These levels offer insights into potential buying or selling opportunities. Envision technical analysis as a tool for peering into a cryptocurrency's future value by scrutinizing its past behavior. It's akin to examining a graph illustrating the roller coaster of a coin's ups and downs. Analysts employ charts, patterns, and indicators as their detective tools, attempting to predict the cryptocurrency's next moves. While not foolproof, this method aids traders in making more informed decisions. Instead of relying on crystal balls, they immerse themselves in charts and trends to navigate the unpredictable realm of crypto prices. For more detailed information on Bitcoin and cryptocurrency, click the link in the description. Embrace moving averages. Let's break down moving averages for beginners. Imagine you're watching a roller coaster ride of cryptocurrency prices, thrilling but a bit chaotic. Now, enter moving averages, your trusty guide to make sense of the craziness. Simply put, a moving average is like a smoothing tool that gives you a clearer picture of the overall trend. It adds up prices over a certain time and divides by the number of days, creating a line that's less jumpy. Short-term moving averages react quickly to recent changes, while long-term ones are more chill, capturing broader trends. When the actual price crosses above or below this line, it can signal potential shifts in the market. So, embracing moving averages is like getting a GPS for your crypto journey, helping you navigate the twists and turns a bit more smoothly. Stay informed, news and market sentiment. Cryptocurrency markets are significantly swayed by both news developments and the sentiments of the public. It's crucial to keep yourself in the loop with the latest happenings from trustworthy sources. Positive news has the power to propel prices skyward, while negative developments can trigger declines. Beyond official news outlets, keeping an eye on social media and forums provides an extra layer of understanding market sentiment, offering valuable insights into potential price shifts. Think of the crypto market like a lively playground. Prices swing wildly based on what's hitting the headlines. Exciting news, such as a major company adopting a new crypto, can send prices soaring, while setbacks like regulatory challenges can send them plunging. It's a bit like a roller coaster ride, with investors gripping their seats tightly. However, there's a twist: market sentiment isn't always logical. Emotions often drive people to either get overly excited or overly anxious, leading to fluctuations based on feelings rather than cold, hard facts. So, keeping yourself tuned into the latest buzz and vibes in the crypto space is akin to having a crystal ball, well, almost, to anticipate the market's next move. Just remember, it's not just about the numbers, it's also about the feels. Risk management: don't put all your eggs in one basket. When it comes to cryptocurrency, the saying "don't put all your eggs in one basket" is solid advice. In the crypto world, it means diversifying your investments across different cryptocurrencies rather than going all in on a single one. Cryptocurrency markets can be unpredictable, with values swinging like a pendulum. By spreading your investments, you reduce the risk of a major hit if one particular coin takes a nosedive. Of course, research is key. Understand the projects, check the tech, and keep an eye on market trends. Diversification won't eliminate all risks, but it's a savvy move to manage them in the volatile world of crypto. Risk management: like we said earlier, diversification is key. By not putting everything in one crypto basket, you're essentially safeguarding yourself. Know the projects, check the tech, and stay tuned to market trends. Diversification won't make risks vanish, but it's a clever strategy to navigate the unpredictable world of crypto. Are you ready to start your crypto journey? Leave a comment below if you like this short video. Please give it a thumbs up, comment, like, and subscribe. Happy investing!